Ladies and gentlemen, welcome. Crypto news and investigative reports. My last video, I got some comments about the date of 2020 for the financial crisis. They were asking, how did I know, or where did I get the date that there will be a financial crisis in 2020? And I went back. There's a couple of different articles, but it has been predicted that there will be a 2020 financial crisis, quite a bit, but from quite a few different news organizations. But this is Fortune magazine here, Fortune Online, and J.P. Morgan has a date for the next financial crisis, and it's not far off. As you scroll down here, it says right here, it says, and I'll read this paragraph. I won't read the whole article, but it says, a decade after the collapse of Lehman Brothers sparked a plunge in markets and a raft of emergency measures. Strategies at the bank have created a model aimed at gauging the timing and severity of the next financial crisis. And they reckon investors should pencil it in for 2020. And so what the article, and then, and it goes on from there, that they're predicting that the next financial crisis is going to be in 2020. And all the signs that we're seeing right now from CEOs, from banks, from World Bank, central banks, commercial banks, all of the news that we're getting from banking is that it doesn't really look good. There's a lot of economic strife. There's high tariffs. There's the global economy is not growing. It's moving very slowly. So there is a lot of negative news out there regarding the global economy. Please follow me on Twitter. We're our crypto news and investigative reports at RobTechP, RobTech, RobTechP. And please hit that subscribe button that you're watching this channel on. We're trying to get our numbers up this year. We got a documentary that we want to release, and we want to get our numbers up before we really do that. All right? So please tell your friends, tell your family. This is crypto news and investigative reports. And we want to try to get our numbers up this year. So please follow us on Twitter, Crypto News and Investigative Reports at RobTech, RobTech, RobTechP. And also just click that button and subscribe, and then hit the bell. And every time a video goes up, you should get a notification about it. All right? All right, so as we move a little forward here, I've tweeted this out today. Hopefully you'll follow me on Twitter. It says the doors are closing in on banks. There is absolutely nowhere for banks to turn. I feel like that. The only option is virtual currencies. Banks CEOs understand that XRP is everywhere and has made every possible connection. Now, there's actually nowhere else for banks to go but to virtual currencies. And because in the last 2008 financial crisis, they printed up so much fiat and sent it all around the world. There's a video of Ben Bernanke talking about how he, talking to the Senate on how he just printed up so much money and just started sending it all over the place to help them to print their way out of the 2008 financial crisis. But now that they done rode that horse already. That horse has been ridden already. Now, the only place for banks to move to now is to virtual currencies. That's the new frontier. I think there was an article about that. I hope I got it up. I don't know if I got that article up, but they're saying that virtual currencies is the new frontier. Excuse me. They're saying that virtual currencies is the new frontier. And so banks and banking CEOs, you saw that in my last video, that bank CEOs understand that. They need to make that transition over into virtual currencies. And so, like I said, please follow me on Twitter. I tweeted this out this morning because of doing research, As I was studying, I ran across this article. Well, actually, this is the World Economic Forum. I guess people are correcting the way I speak. I'm a little country boy, so I might pronounce some things a little different. World Economic Forum, and it says this is what government debt looks like across the globe. It's a frightening picture, guys. It is. Oh wait, before I move off of this Twitter, there's one more thing I want to say about virtual currencies. Is virtual currencies cannot just be made up out the clear blue, like fiat can be printed up out of the clear blue, and so the virtual currencies is going to take over, and the virtual currency I believe that is going to take over is Ripple XRP. And the reason why I say the digital asset XRP is going to take over because it was designed for banks, right? Brad Garlinghouse emphasizes that when he talks about this digital asset, and he talks about XRapid, XCurrent, and XVIA. He always makes it clear that it was developed for banks, for banking. So that's primarily why on my videos I pay a lot of attention to banking. So I wanted to make sure I say that. But then we moved over to global debt. So it says, this is what government debt looks like all across the globe. And it's going to make sense because I think the only place for virtual currencies to go, is to central banks. I think that's the last customer that needs to define, that needs to get on board, that needs to come on and you know, get on this train is our central banks, because they won't be able to print out enough money anymore, guys. I mean, you know, like I said, they've ridden that horse already, so that's not going to work. What they're going to need to do is they're going to make that transition to those virtual currencies, whether they be CBDCs wholesale, CBD sales public, or whatever stable coin, blah, 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 whatever they do, they need to come on and do it, because that's what's holding up this whole flipping on this switch. Is a lot of these central banks, they're the key right now. And so look at the debt. Let me get back to the debt. This is what government debt looks like across the globe, and it's all going to come together. So I want to start here a little bit too. This was very interesting though, because this is the global debt, man. Look at Japan. Japan has 238% debt there, and the United States is right here. I don't know if you can see that. The U.S. is 105. You know, I think Germany's got some serious debt. Greece is still at 182%. And, you know, the IMF went into Greece, and we thought that, you know, they should be out by now. That was a disaster. And so some of these larger countries are so in debt. Italy is at 132. Portugal 126. Sudan 122. Singapore, right here, Singapore, 111. United States 105. I think I said that already. So there is a lot of global debt, and it's like the debt snowball, and that's what this chart is. It's like a snowball, and it's showing the snowball of debt. The green is a lot of little bitty countries, you know, like Bangladesh at 33, and you know, New Zealand at 32. Some of these countries are little bitty countries, so they don't have that much going on. But the bigger ones are in some serious debt around the globe. I'll read this paragraph right here. It says the structure of the visualization is apt because debt can accumulate in an unsustainable way if governments are not proactive. This situation can create various cycles where mounting debt can start hampering growth, making the debt ultimately harder to pay off. And here's the countries with the most debt on the books. Japan at 237. This is 2017, by the way. Greece is second, 181. Lebanon, 146. Italy, 131. Portugal, 125. Sudan, 121. Singapore, 111. United States, 105. Belgium, 103. And Egypt at 103. So these countries are in some serious debt. And the only thing that they can help them to get out, or one of the main ways for them to get out of debt, is that their central banks start taking a more proactive role in helping, because the central bank is like a national bank which needs to step in and start helping these countries to get out of all of this debt. And so with that being said, this was just Ripple. No, I don't want to go there. With that being said, I want to just go to this analysis right here. This is the UN. This is the United Nations site, and they have. And I want to talk to you about central banks and the problem with central banks. It says economic analysis and policy divisions. And I want to, let me comment a little bit more about the world economic situation and prospects for 2019. It says global growth is expected to remain at about 3% in 2019 and 2020. However, the steady pace of expansion in the global economy masks as increase in downside risk that could potentially exacerbate development challenges in many parts of the world, according to the world economic situation and prospects of 2019. The global economy is facing a confluence of risk, which could severely disrupt economic activity, inflict significant damage on long-term development prospects. These risks include an escalation of trade disputes and abrupt tightening of global financial conditions and intensifying climate risk. And I'll read this paragraph right here, because this is pretty consistent with what Christine Lagarde said at the Davos. And this is some of the same stuff that she was saying. And the UN is actually supporting some of the same stuff that the IMF is saying. It says, while global economic indicators remain largely favorable, they do not tell the whole story. The world economic situation and prospects 2019 underscores that behind those numbers, one can discern a build-up in short-term risk that are threatening global growth prospects. And that's just what Christine said at the IMF. She said that the same thing is happening, that there are so many problems with the global economy. She downgraded it. She said it was moving really slow. It looks like we're going to have more problems. She said she downgraded the global forecast, and it means that, like I said in my last video, things are going to get worse. She said risk is on the rise. And so if she's downgraded the global forecast, that means that there's not going to be that much movement. And the risk is high. So this is echoing the same things. It says, more fundamentally, the report raises concerns over the sustainability of global economic growth in the face of rising financial, social, and environmental challenges. That's Antonio Guterres, which is the UN Secretary General. And I won't go on reading the whole article, but you get the picture here, guys. Things, like I said in my last video, it's not a lot of good news. There's some tough times ahead, some serious tough times ahead. And let me move to the next thing. This is I don't know what. Oh, let me turn this on. There we go. It says this is the Switzerland. It says cryptocurrencies are more like assets and not currency, says Swiss bank central bank. And I just want to talk about central bank for a minute, because I think here's the problem. I don't really want to go into assets and blah blah blah, but central bank 2019 now. Swiss central banks raising eyebrows. I want to read. I don't want to take the time to read the whole article. I just want to read this paragraph right here. It says, if central banks really start issuing digital currencies, that will a big have. Okay, they screwed it up here. It says, if central banks start issuing digital currencies, that will have a big impact on the functioning of the financial system, he continued. So this article is actually saying that central banks need to go ahead and start getting involved in virtual currencies. These cryptocurrencies, as we know them at the moment, are more like assets, not really like currency. As long as we have an influence on the value of this unit of account, so the change of interest rates, the change of the size of the balance sheet, the change rate, etc., the power of monetary policy will remain. And he's actually saying in this article that the Swiss central banks really need to get involved, because that's really the last customer to me. We got, what happens in banking is that you go from a central bank, well, the IMF, of course, is the super bank, and the World Bank, and then you have what they call national banks, which are your central banks. And then your central banks lend money at a low interest rate to your commercial banks. And then your commercial banks go out and try to sell that money. They try to sell it for college loans, to buy a house, to buy a car, and for those type of things. But if the central banks are not on board and then they're not doing anything, then that hampers commercial banks, and that hampers the movement of money. So central banks really need to get on board. Like I said in this Twitter, there's nowhere else for banks to go. And bank CEOs understand that XRP is everywhere, except that we don't have central banks really getting on board with XRP, because there's so much strife, there's so much fighting in between central banks. They all need to get on one page, and they all need to get on board, and they actually all need to get with the XRP. The digital asset XRP. Banks, the early bird gets the worms, and if you snooze, you lose. And I'm kind of saying that's what's going to happen with these central banks if they don't get on board and start helping, their countries. They're not really getting on board. They're not moving. Here's another article from the Financial Times today about central banks do their best to mop investors' brow. Here's another article saying pretty much the same thing. Central banks need to get on board. We've heard from two major global central banks this week, and for both Japan and the Eurozone, the story is one of patience and hope. They're saying the same thing. Where are the central banks? When are the central banks going to step up? When are the central banks going to get on board? You already got the digital asset XRP that can help these central banks get going, but they're dragging their feet, basically, is what these articles are saying. The mantra also applies to investors as they try to gauge where markets stand after a New Year rebound already shows sign of lacking true conviction. It's sad, guys. The way to make things better is already there. Probably some regulatory things that are probably dragging their feet. There's some regulatory issues, I'm sure, that probably needs to be worked out. But overall, I'm telling you today on this video that central banks are dragging their feet, and they need to get on board with XRP, because if central banks start using it, then things will start moving. And that's exactly what I was saying here. Banks, the early bird gets the worm. If you snooze, you lose. Some of these central banks might get taken out because they're not doing anything. And then last but not least, it was at Davos, right here today. Christine, Davos, IMF Christine Lagarde says fintechs will shake the system. And she's saying pretty much the same thing. International Monetary Fund head Christine Lagarde told the World Economic Forum in Davos, fintechs is going to shake the system. She also urged against relying on central banks in the next financial crisis. Okay, see, so if the central banks don't get going, the central banks are going to be a problem. And if they don't develop their virtual currency, then they're dragging their feet because they don't feel like it's actually something that they really need to do right now, because they still are printing fiat money. But as she is telling them, central banks have very limited ammunition right now. So they need to get going before things get worse. Her comments followed the USB CEO Sergio Amorte saying that he hoped we don't rely on central banks to resolve the issues in the wake of another crash. He suggested that some central banks have very limited ammunition, while others perhaps have a bit more flexibility. So what could possibly be happening here, guys, if central banks don't step it up and get on board, they can be taken out. All right? And so I just want to drop that out. That's kind of what I was studying today and looking at. To me, that's the news, because that's what's holding That's what's holding everything down. What's holding everything down is that central banks are not actually making that transition. They're dragging their feet, especially when it comes to what Christine was saying. These central banks are dragging their feet. They know that fintech is there. They know that they can. They can make the move, but they're just not doing it. And with them not doing it, it's holding everything down. It would be very nice if the economies at large didn't have to rely on central banks yet again in order to resist the next shock. You know, and like she's saying, in 2008, they just, because central banks print up money, they printed up so much money that they printed their way out of it. But now that's not going to be the thing. She singled out Mark Carney of the Bank of England and Jay Powell of the Federal Reserve as two of the very few central banks who have a little bit of space to maneuver in the wake of the next downturn. So, guys, it's going to go down. There's going to be a financial crisis, like I said here, and it is not far off, like J.P. Morgan was saying. And they're predicting, and they said pencil it in for 2020. And so what really needs to happen with all of this global debt right here, all of this global debt, these central banks, they need to get on board and start trying to do something about the coming financial crisis, according to the World Economic Situation Prospect 2019. They know that is coming. They say that is coming, but central banks are dragging their feet, and central banks are not doing what they need to do to not, to help fight against this coming financial crisis. So to wrap it up, guys, that's where it is. It's central banks, right there. And I've always said in every one of my videos, until the IMF, World Bank, central banks all get on one page, we're not going to get mass adoption by 2020. If central banks don't get on board, you're not going to get XRP mass adoption by 2020. All right? And that's my prediction for today. All right? So please follow me, guys, on Twitter. Please, we're at Crypto News and Investigative Reports. Our handle is RobTech, ROBTECH, RobTechP. Also, please subscribe to our YouTube channel. We're still working on that documentary. We want to get that together. We want to get our numbers up. Thank you for joining me. Have a good day.